Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar returned to the 70-cent level this morning, retesting a 5-week high after a stronger than expected labour market report reinforced expectations that the Federal Reserve or the Reserve Bank of Australia could keep interest rates higher for longer. According to the data released by the Australian Bureau of Statistics, the ABS, employment surged by 76,300 in June, well above the forecast of 16,400, while the unemployment rate held steady at 4.4%, highlighting the resilience of the Australian labour market. Investors will now turn their attention to next week's June quarter CPI, which is expected to be the key factor in determining whether the RBA raises rates at its August meeting or not. Along with that, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, remains around 101, which is limiting further gains for the Australian dollar ahead of next week's Federal Reserve meeting. With the Fed now in its pre-meeting blackout period, investors are focusing on the incoming data, that is the US initial jobless claims and the S&P Global Flash PMIs, for further clues on the policy outlook. But turning to the technicals, well, the key level at 70.15 hasn't fully been cleared, and the market still seems to be struggling around this area. Although the call, if breached, is up to 71 cents, it's going to be a very tough, hard, rocky journey, and not one I will be bullish on, just in case we do see a failed attempt. Technicals aren't overly favourable of supporting a sustained move, but overall, though, the break of 70.15 should be a slow grind. Any pullback? Well, the sport's seen around 69.65 to 69.25. The euro dollar trades cautiously today on Thursday as investors await the European Central Bank or the ECB's interest rate decision and President Christine Lagarde's press conference. Markets are widely expected that the ECB may leave rates or its main refinancing rate unchanged at 2.40 or 2.4%. With attention focused on whether policymakers maintain a hawkish pause by signalling that further rate hikes remain possible if inflation pressures persist. So looking at the technicals, resistance is seen around 114.60 and a cap at 115, figure 15. In light of how the market's playing or trading, I still feel sideways is the way, and also any weakness will find or should around 113.40.50 and a cap, as I mentioned, around 115. Markets still trading somewhat nervously around this level of 163. With a hanging man posted yesterday, I still feel a bit cautious to the fact that the downturn is all soon about to commence. And therefore, with this negative candle, let's see if we do get a move. Now, a break beneath 162.55 should be the trigger to send it to 161.70 to 160 as initial target. Sterling, well, the market finally found a bit of demand around 133.5, with after 5 consecutive down days, getting a little bit more demand coming back. And let's see if it can sustain. I'm not too sure on whether it will, and a break of 133.5 would open way towards 132.5. More stops on the way, if so. Commodities, well, the gold is still holding relatively firm since the break above 4,065. And now looking for a potential target around 4,300. Given the fact that the technicals are bullish, and I like the way these candles are performing, let's see how it rallies, and then any pullback to be limited. And oil, well, the target's upside was 81.85 and now looking to 88.90. But reaching 85 has left me neutral, but given the fact the ADX is still trending, there is still a little bit more room to the upside, and any pullback may be shallow. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the day.